Good morning, everybody. It's Chris from Serene Education with the 4 majors and that's update for the 17th of August 2012. Hi guys, hope you had a fantastic trading day yesterday. A bit of movement yesterday, a lot of movement to the upside for most pairs, and including the 4 majors. So let's have a look at the daily on the Euro US dollar. You can see that candle yesterday, very bullish indeed after 2 negative candles at the underside. Price yesterday moving higher on negative figures coming out of the US markets yesterday afternoon, and sure enough, price heading back up towards that 12,350 mark, and you can see 355, sorry, 12,355 in and around this area, and you can see at the moment now heading into a fib retracement area here in the shape of the 38.2, which coincides with this major support and resistance level here at 12,3500. So notice RSI is above the 50% line. Moving averages all below, price acting as support. The only thing that's in the way here is not only this 1235, but this 38.2 fib area here at the 1236.5. So ideally, if this is going to be positive, we do like to see more of price spending more time above this. 12,400 would be better, but if we can get a nice bullish candle above this 1236 here, then ultimately we should see price reattempting these highs here at the 12,400 mark to start with. 1242, 1243, depending on if you're trading wicks or bodies, it's entirely your choice. But get above here, you can see a lot of resistance here at this 1236 market, this fib retracement at 38.2 here, in coinciding with the 123500. So if you're looking to trade this, you want to get a bullish candle away from this major support and resistance level. So the bigger the candle, the better the possibility. Here you can see, for example, getting away from here, but not very decisive, these candles. This one over here in particular, almost a shooting star formation, pulling back and then heading higher, but not really moving a lot of momentum away from this point, and in doing so, spending a lot of time giving you spinning tops and dojis, which is not really what you want to see after a breakout. You want to see a nice breakout, a pullback, and then a bang, a nice up candle confirming this is genuine support. Let's move higher. That failed to materialize over here. So ideally, if this is going to be a genuine break, we've had a reattempt here just recently, that failed. We want to see a nice bullish engulfing candle to the upside, finding support at the 1235, 1236, 50 mark. Otherwise, what we can see, you can see the last 4 hour candle being indecisive, the spinning top on major resistance support. So we do need to see, and that's an indecision candle. So we want to see a decisive candle on the bullish upside or bearish downside. Either way, it'll give us an idea of where price is likely to go to. If we get another resistance level here, bearish engulfing, then we should be tackling back down towards the institution moving average to start with. We could possibly see the 50 period moving average at 1232 being tested first, and ultimately back down here towards the 1225 or the institution moving average down the bottom here on our 4 hour. Otherwise, bullish engulfing above this 1236.50 mark here would definitely confirm we should be looking for further topside with 1241 and higher as our target for today. What's my hourly chart telling me? This is my entry chart. You can see quite clearly here we have red arrow. So straight away, no trade. Okay, I need to see a blue arrow followed by a blue candle followed by RSI being above 50 and all the moving average below price. I have that. I have all the moving average below price. I'm trading above a major support and resistance level. My candle is blue. The only thing that is missing from this chart is my blue arrow candle. Okay, so ideally get above this consolidation here, a nice bullishing candle moving higher, then we should see game on. Ideally back up towards these areas roughly around here 1242, 43. Depends we trading the wicks or not, but if you go for the wicks, then you're looking at the 12 just below the 124500 mark. But anything above here, a nice bullish candle breaking higher, yes, you're going to give a bit of this profit to the market, but it'll be a confirmation signal. Okay, that's what we want. We want confirmation. We want a genuine move away from this major support and resistance level. The further away we get from it on the upside, the more likely is positiveness is going to be long term. But if you don't see that, then it's going to just be pulling it back to that major support and resistance level. So let's look for a nice bullish engulfing candle here, moving away from this 1235 to the upside, or bearish engulfing, moving down below, and then we'll see if there's definitely a chance for a target on either side of this. Next up, sterling. Let's have a look and see what's been happening on the daily. Yesterday's candle also moving higher after 3 indecisive candles above a prior February retracement area in the shape of the 38.2 yet again, and the 1566 mark. Yesterday was quite interesting, talking to students, going into the news announcement yesterday morning on, I think it was retail figures, and they were expecting a negative forecast and it came out positive. And sure enough, the hourly candle and the 4-hour actually closed higher than this 1566, and that just actually built that momentum on this support over here, and we saw price heading up towards the 1575 intraday. I'll show you that on the 4-hour chart. You can quickly see this beautiful hammer over here on support after that news announcement, and then you could take on a quick trade up to that 1575 mark and close your account as we headed into it. Otherwise, we've seen a pullback now because this is a major support and resistance level, and sure enough, we saw indecision going into the top of that candle there with a nice little evening star formation, or shooting star in particular. A lot of hesitation, and prices reverted back to the downside. So CTC is still looking positive upside because you're seeing swing highs, and if you're seeing swing highs, that's dictating uptrend. Intraday, you can see the low here at 1555, swing higher on the institution, moving higher, all the moving averages below price. Everything's doing fantastically well. How far back is this likely to retrace? We can take off a fib retracement area on the low of the candle, this 4-hour low, to the high. You can see it's testing 38.2 as we speak at the moment now. Price is bouncing high on the 20% mark. If it found support here, look for price to reattempt 1575. If it fails to and moves lower, then ultimately you should be looking for the lows again back towards those support lows here at 1566. So if we look at the hourly charts for an entry level, let's have a look. All the institution moving average below price, so that's positive. However, you can see prices come unstuck at that 1575 mark, which is that major support and resistance level on our daily. So we're going to make a note of that on all our time frames, intraday time frames, because that will dictate how much likely we're going to see price moving to, or targets, etc., or how far we're likely to capitalize on price action. And you can quickly see now we've headed into that, we've pulled back, now we've had a pullback of note. How far is it likely to pull back? Well, this is what we want to know now. Here the CTC is all set up for negativity, so as long as we're trading below the 1575, we should be looking for consolidation. If it gets above 1575, then we should be looking for positiveness. So that stands now. As long as it stays above the institution on this time frame, we should see price reattempting these highs here at 1575. Moving on to good old Swissy, US dollar Swiss franc. Let's have a look at the daily. Another bearish engulfing candle yesterday after that news on the US session. Moving lower at a resistance level here. You can quite clearly see that there's a noticeable area of consolidation here at the 50% projection level. We took a projection of the low here in May to the high in the start of June to the pullback low here through June, and it gave us these fib projection levels to the upside. And you can quite clearly see that 50% line over here just below the 980 is very much a resistance level, and prices failed to break above that consistently over the last week or so. And yesterday we saw price trading through it, however closing lower, giving us this exhaustion candle, and you can see prices reattempting the 970. 970, a very strong support and resistance level. Also in the past, if I just zoom out, you can quite clearly see that was a major resistance level in the past before we saw the breakout and the attempt of 1000. Now if it closes below the 970, then we should see price heading towards at least the 78.6 mark here at 960 before we see 945, 940 back towards the institution being our ultimate target for the foreseeable future. Notice the CTC is still blue across the board, and as long as we're trading above 970, then it remains to be seen. We could see another push or reattempt of this 980 mark again. So bearish engulfing yesterday. We are in limbo for the US dollar Swiss franc. If you are looking for something to trade, I wouldn't trade this pair until we actually get a break lower than 970 or a bounce, a positive bounce, consolidation bounce here to target the upside again. Otherwise, this is a no-go. Last bit of the day is US dollar Japanese yen. Let's have a look at the daily and see what's been happening. Yes, beautiful punch through major support and resistance level here at the 23.6 retracement figure for this pair. After consolidating for a while, it's really moving with a lot of guts to the upside. Meeting all this criteria I mentioned through the early part of this week. Bouncing higher and taking out major highs, consolidation highs, breaking through the institution moving average. You can see the CTC for the first time. We have 3 bits of our major strategy. We have an arrow, candle, and one part of the histogram. See, the bottom part of the histogram is still red. So if you can find support above here at 79.20, look for support to be made above this institution moving average, and then we can definitely see price kicking on towards that 80 mark. So intraday we want to see exactly that panning out on a 4-hour, for example. 79.20, there we go, well above the institution, above the moving averages. Nice bounce to the upsides. All our things are in our favor, CTC, etc., all looking positive. bouncing off that major support and resistance level here at 78. A lot of consolidation, and as I mentioned, the longer it finds a reason to be trading above it, the more likely it's going to start building on that momentum. And sure enough, we saw it tackling the 79.20 yesterday. As long as it can actually stay above the 79.20, look for this pair to start moving higher towards that ultimate goal, back up towards this 80 mark up here, which is our major resistance long term. So always make a note of your major support and resistance level on your larger time frames, i.e. your daily in particular, because that will definitely dictate price action is likely to go to, or look for profits, targets, etc. And these areas over here will definitely confirm that. So you can see nice close and stay above 79.20. You can do 10, 20, 30, 40, 50. There's at least 50 pips from this pair to the upside. Nice little target. I wouldn't throw that aside. So as long as she stays above 79.20, look for top side for this pair towards the 80 mark. That's it, guys. Short and sweet today. End of week. Not a lot of data out there, news out there today, but just be careful. Still waters run deep, I always keep saying. So if there's little news, you always tend to find something that happens in the background. Otherwise, the most pairs, euro, US dollar, sterling, US dollar, all trading at major support and resistance levels, not really giving much to the market. We do need to see prices giving us a bit of momentum. We're not seeing that generally, a lot of momentum with genuine sentiment behind it. We're wanting that, and until we get that, we're going to see prices just pretty much trading in consolidated ranges. Excuse me. Otherwise, let's hope and see if we get a kick in the backside for most pairs today. Otherwise, we're just going to have to wait for a new week and see how that takes us. Otherwise, have a great weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.